Take a look at this list. Some of your money might be in it, and that might mean that you own Facebook, even if you said, I'm staying far away from that stock offering. We've got Joel Light here to tell us how it is that so many mutual funds ended up owning Facebook.
Yeah, well, so
Why?
so far we're seeing 160 mutual funds that picked up the stock so far, and this is as of the end of May. So we're only looking at funds that make monthly disclosures,
Which is a smaller pool.
Yeah, which is a smaller pool. Most mutual funds only disclose quarterly, so there'll no doubt be even more once those quarterly disclosures come out. But more than half of those mutual funds are in people's 401k plans. We're talking some of the biggest funds in the world, including Fidelity's Contra Fund, $81 billion in assets. They picked up 10 million shares, and a lot of funds that people get from brokerage houses. Some Morgan Stanley mutual funds had more than 5% of the portfolios allocated to Facebook. Right. So that's a serious allocation.
Now, but why would this be an issue if someone has a technology stock mutual fund or a growth stock mutual fund? Shouldn't they expect to have Facebook in there?
Yeah, definitely. And the predominant buyers of Facebook were these large cap growth mutual funds, which you're expecting. But there are a handful of funds where it doesn't make any sense. There are a handful of value funds that picked up the stock. Now, nobody considers Facebook a value stock at this point. Yeah, it's trading at a
maybe down to 25 it was.
Right. Well, but even at 25, you're still looking.
Still a huge multiple.
Exactly. There's at least one dividend or one mutual fund.
Actually, while you're talking up on screen here, we have some of the big funds that have Facebook. As you said, Fidelity Contra Fund, Oppenheimer Main Street.
Right. And I was about to say that there's one dividend fund that picked up the stock, and obviously Facebook doesn't pay a dividend, and they're not going to be paying a dividend anytime soon.
What are they thinking when they do something like that?
Well, I mean, you've got to be thinking that a lot of them were expecting that pop right after it came out, and a lot of them kind of have a herd mentality where they know that if they buy the stock, even if the stock didn't perform well, which it didn't end up doing, at least they'll be wrong with a lot of other people. What mutual fund managers are most afraid of are being wrong and being alone. In this case, they were wrong, but with a whole bunch of others.
Which is one of the biggest indictments of the industry is just that statement. Oh, they're afraid that they're going to underperform the benchmark, as opposed to, I'm afraid I'm going to lose your money.
Yeah, well, the problem with mutual fund managers is they have, in addition to risking investors' money, they have their own risks, their career risk, right? If they're wrong with everybody else, I mean, who are you going to fire? Everybody? So in that sense, they're kind of protecting themselves.
Let's go back to one thing you mentioned there, Morgan Stanley funds with a lot of this stock. Now, Morgan Stanley, of course, was the lead underwriter of the Facebook offering. When I read this in your story this morning, I thought, you know, this really does not look it. It looks like Morgan Stanley turned to its fund arm and said, start buying this stock to support the stock. Now, you'd hope that wasn't happening, but that's what it sort of looks like.
Right. Well, I don't have a good answer to that question. Morgan Stanley declined to comment for the story. We do know that they also owned a lot of shares before the IPO, you know, some of these private shares. So in some cases with these funds, they were just building off of that existing position. The manager who took a big stake in Facebook, his name's Dennis Lynch, he runs a focus fund, so it's not uncommon for him to have, you know, more than 5% of his portfolio allocated to an individual stock, but having, you know, a 10% allocation to Apple, which is a huge part of the index, is a lot different than having a 7% allocation to Facebook, which is a very small part of the index, despite being a large company.
I mean, that's the other thing beyond Morgan Stanley is just surprising because it does look like so many people are thinking, hey, let's get in on the hot offering, we'll get the pop, and just a quick way to make cash. Or I think, as you say, a lot of people with 401ks think these funds are in there, they're much steadier in terms of their investment philosophy.
Yeah, well, when you think of a core portfolio holding like Fidelity Contra Fund or a fund that has, you know, Main Street in the title, you're not thinking of you might be thinking of funds that pick up large cap growth stocks, but you're not thinking of funds that get in on an IPO, you know, right after the IPO happens when there's a huge amount of volatility. So I mean, the good part for fund investors is that for these funds, it's still a pretty small part of the portfolio.
All right.